Something just shifted in the defense markets. And the numbers don't make sense. Lockheed Martin up 17% in a single session. Northrop Grumman exploding higher. But here's what they're not telling you. This isn't about budget announcements. This is about preparation. The surface story is simple enough. Defense budget proposal, $1.5 trillion. The media calls it policy. They call it politics. They're missing the point entirely. Because here's what actually happened in the last 96 hours. Institutional money moved. Not the retail crowd chasing headlines. Not the momentum algorithms following trends. The smart money. The money that knows things before they hit the news cycle. $47 billion flowed into defense equities. That's not a budget response. That's positioning. That's someone with information acting on certainty, not speculation. Let me show you what I mean. Kratos Defense, you probably never heard of them. They don't make consumer products. They don't advertise during the Super Bowl. They make things that don't officially exist. Hypersonic weapon systems, unmanned combat platforms, the kind of technology that operates in classified budgets. Kratos moved 17% in 6 hours. Companies like Kratos don't move 17% on policy announcements. They move when contracts get signed, when programs get accelerated, when someone in a windowless building decides that time just became a critical factor. But here's where things stop making sense. The defense budget proposal hasn't even reached committee. It won't be voted on for months. There's no emergency authorization, no immediate funding mechanism. So why is the money moving now? Why are pension funds suddenly rotating out of tech and into Raytheon? Why are sovereign wealth funds accumulating Northrop Grumman at prices they rejected just weeks ago? This is where the system starts leaking. Because the smart money doesn't wait for Congress. It doesn't wait for appropriations committees or budget reconciliation. It moves when it sees the shadow budgets, the off-books allocations, the programs that exist in congressional black site briefings. And what those briefings are saying? What's driving this sudden institutional urgency? That's the story nobody's connecting. 3 weeks ago, something happened that didn't make the financial press. The Pentagon's Defense Innovation Unit issued what they call a rapid acquisition notice. Boring bureaucratic language. Except the dollar amounts attached weren't boring at all. $12 billion in immediate procurement authority. No competitive bidding, no extended timelines. Authorization to bypass standard acquisition protocols for what they termed critical national security applications. When has the Pentagon ever needed to bypass their own procurement system? When has urgency ever trumped process in defense spending? The answer should worry you, because it suggests someone knows something about timing that the rest of us don't. But it gets more specific, more targeted. The rapid acquisition notice wasn't spread across traditional defense categories. It wasn't helicopters and artillery shells and body armor. 70% of the allocation went to 3 specific areas: electronic warfare systems, space-based assets, and something they call gray zone capabilities. Gray zone, that's military terminology for operations that exist between peace and declared war. Capabilities designed for conflicts that aren't officially conflicts. Systems that operate in the space where traditional deterrence breaks down. Why would the Pentagon need gray zone capabilities right now? Why would they need them fast enough to bypass normal acquisition procedures? The institutional money rotation suggests they think they know the answer. Let me give you another data point that should connect the pieces. 2 months ago, Northrop Grumman signed a memorandum of understanding with a company called Anduril Industries. You might know Anduril as Palmer Luckey's defense startup. What you might not know is that Anduril specializes in autonomous weapon systems, AI-driven kill platforms that operate without human oversight. The memorandum wasn't public. It didn't get SEC filing requirements. But the money flows tell you it happened. Because Anduril's shadow investors, the sovereign wealth funds and defense-focused hedge funds that don't publicize their positions, they've been accumulating Northrop Grumman equity for 6 weeks. Someone knew about the partnership before it was formalized. Someone was positioning ahead of the announcement that still hasn't been announced. This doesn't happen by accident. This level of coordination between private defense contractors and institutional capital requires information flow that operates outside normal channels. Which brings us to the timing question. Because if you look at the calendar, if you track the institutional positioning, everything points to the same window, the same preparation timeline. Fiscal year transition begins in October. That's 8 months away. But the money is moving now. The contracts are being signed now. The production schedules are being accelerated now. That suggests the applications for these systems, the theaters where they expect to deploy gray zone capabilities and space-based assets and AI-driven platforms, those applications aren't 8 months away. They're closer, much closer. And here's what makes this particularly dangerous for anyone not paying attention. The defense industrial complex doesn't just build weapons. It builds market structures. When Lockheed Martin stock explodes 17%, it's not just reflecting company fundamentals. It's reflecting the entire supply chain ecosystem that flows through defense contracting. Rare earth mining companies, semiconductor fabrication, advanced materials processing, cybersecurity infrastructure. Every component of modern military technology requires inputs that create dependencies across the entire industrial base. When institutional money flows into defense at this scale, with this urgency, it's betting that those supply chains are about to become critical. Not strategically important, critical. As in, if you don't have access, you don't survive, critical. China controls 90% of rare earth refining. Russia dominates titanium production. Ukraine supplies 40% of global neon gas, which is essential for semiconductor manufacturing. If you're positioning for conflict, if you're preparing for supply chain disruption, if you're building weapon systems that need to operate independently of global trade networks, you need to secure these inputs before they become inaccessible. The institutional money rotation suggests that securing phase has already begun. But here's where individual positions become systemically dangerous. The average portfolio has no defense exposure. Zero. The typical retirement account, the standard index fund allocation, the robo-advisor model that most people rely on, none of it includes meaningful defense contractor positions. So when institutional money rotates into defense at this scale, it's not just moving between sectors. It's moving away from where retail money sits, away from the tech stocks and growth names and speculative positions that dominate individual portfolios. What happens when defense spending becomes the dominant economic driver? When government contracts replace consumer demand as the primary revenue source for advanced technology, the companies that don't have defense relationships, the pure-play consumer technology firms, the social media platforms, the e-commerce giants, they don't just underperform, they become irrelevant. And the retail investors positioned in those irrelevant companies, they don't just lose money, they lose access to the economic transformation that's already underway. This is what institutional positioning tells you. This is why the smart money moved early. Because by the time the transformation becomes obvious, by the time the headlines catch up to reality, the entry points will have disappeared. But there's a deeper systemic risk that nobody's calculating. Defense spending creates economic distortions. When government becomes the primary customer for advanced technology, market signals break down. Price discovery mechanisms stop working. Innovation gets directed toward military applications instead of productivity improvements. The Soviet Union collapsed under the weight of defense spending that crowded out civilian economic development. They built the world's most advanced missile systems, while their consumer goods sector stagnated. When institutional money flows into defense at this scale, it's betting that military applications will generate better returns than civilian markets. That's a bet on conflict being more profitable than peace. And when conflict becomes more profitable than peace, when the economic incentives align around military solutions instead of diplomatic ones, the probability of those conflicts increases dramatically. The money flows suggest that probability shift has already been priced in. Which brings us back to timing. Because all of this positioning, all of this institutional rotation, all of these shadow contracts and rapid acquisition authorities, they're building towards something specific. The patterns suggest a window. A time frame when these capabilities will be tested, when the investments will need to generate returns, when the preparations will face real-world applications. And that window, based on production timelines and contract deliverables and the urgency of institutional positioning, that window appears to be opening sooner than anyone wants to admit. The defense contractors are hiring at rates not seen since the Cold War buildup. Lockheed Martin added 14,000 employees in the last 6 months. Raytheon is expanding production facilities in 17 states simultaneously. This isn't capacity building for future demand. This is mobilization for immediate requirements. The institutional money knows this. The sovereign wealth funds know this. The pension managers and hedge fund allocators know this. What they're betting on, what's driving the $47 billion rotation into defense equities, is that military solutions are about to become the primary mechanism for resolving international disputes. Not diplomacy, not economic pressure, not sanctions or trade negotiations, military solutions. And in a world where military solutions become primary, the companies that build military capabilities become the most valuable assets in the portfolio. Not the most speculative, not the most growth-oriented, the most valuable. Because when the alternatives break down, when diplomatic channels fail, when economic levers lose effectiveness, the only assets that matter are the ones that project power. The institutional positioning suggests that breakdown is closer than most people realize, closer than the headlines admit, closer than the policy discussions acknowledge, because money doesn't lie. Institutional flows don't respond to rhetoric or hope or wishful thinking. They respond to information, to certainty, to knowledge about what's actually coming, and what's coming. According to the $47 billion that just rotated into defense contractors, is a world where military capabilities determine economic survival. The question isn't whether this transformation will happen. The money flows suggest it's already happening. The question is whether you're positioned for a world where defense contractors become the dominant economic sector, where military applications drive technological innovation, where government contracts replace consumer markets as the primary wealth creation mechanism. Because if you're not positioned for that world, if you're still betting on consumer technology and social media platforms and e-commerce growth stories, you're betting against the institutional money that just moved $47 billion in the opposite direction. And historically, betting against institutional positioning when it moves with this kind of urgency, that's not a winning strategy. The defense industrial complex just activated. The question is whether you recognize what that activation means for everything else you think you know about market structure and economic fundamentals. By the time the headlines catch up to reality, the positioning phase will be over, the transformation will be complete, and the opportunities, both the ones you capture and the ones you miss, those will determine whether you participate in the new economic structure or get left behind by it. The choice is happening now, not tomorrow, not next quarter, right now. While everyone else is still trying to understand what the 17% move in Lockheed Martin actually means,